Okay, Bismillah. Well, today is Monday, January 29th, 2024. Let's begin. And there was no news today. There is JOLTS report tomorrow at 10. Moderate news at 9. High impact news at 10. The JOLTS job openings. And this is FOMC week, non-farm payroll week. All right. And let's start off with clear everything up. This is the time frame we're on. This is the ticker NQ. You see it here as well. So let's go to DXY. See what's going on there. Start from the weekly. You can see what has price done so far. Okay. Inverted fair value gap here. This is the weekly. All right. Also took out the swing high. It's the high here. So that was your entry and the second entry here. Why did I do that, right? Okay, so we have a fair value gap here. Bearish fair value gap after taking out buy side. We have a fair value gap. We have a retracement into that fair value gap. Here's your institutional order flow entry drill, IOFED, where you get in at the first opportunity, so to speak, in a fair value gap. So you had one entry here, second entry here. This is a weekly chart, and you would have targeted this bullish fair value gap. All right, try to make this. Because obviously it's wick down, wick through. But the bodies, you can see, bodies stayed above the halfway mark, consequent encroachment of this weekly fair value gap. Just make sure all this carries over. Drop down. Mentioned before that I usually fine tune these fair value gaps on a lower time frame. It's really no point of adjusting this. We can see the inverted fair value gap from way back here. From like June, July. Can leave that there. You can adjust this if you like. And this doesn't have an equivalent, but we have an inverted fair, we have a bearish fair value gap here, which is technically an inverted fair value gap, which I like more than fair value gaps. So I am tempted just to adjust that like that, and we can see what is this high here. This is the bottom of the fair value gap, and this is yep, it's good enough, right? Oh, Nelly. I don't know who Nelly is, but excuse me. All right, so all right, drop down again. And we can see price drop down into the weekly fair value gap. I don't know why this didn't carry over. It doesn't matter. All right. All right, so we see price traded down into this weekly fair value gap. Traded back down. Again, stayed above, closed above the consequent encroachment. Got a bearish fair value gap here. We have a tiny bullish fair value gap here. And we have multiple entries. Multiple entries here. Obviously, this is the dollar. Trade it back down into here. There's another entry here, long consolidation. It already had taken out these. Ready to take out these swing highs. It's currently inside of a volume imbalance. It's currently inside of a bearish fair value gap. Okay, this is the 4-hour time frame. All right, so where do you think price is going? All right, check out the swing high here. Have a break in market structure here. Tracing it back into here. And we look like we have a 1, 2, 3 three drives pattern. But it is, you can call that a bear flag if you wanted to. It's not that I would trade bear flags, but see things, you take note of it. We definitely have a 1, 2, 3 pattern here. Pull back or retracement back into the range. And you have so obviously we consolidating here. Today is the 29th. Let's drop down again. So we can see here, there's your 1, 2, 3 pattern here. Taking out this, eventually taking out the buy side here. And all right, 1, 2, 3. Took out buy side. Now we have another on this time frame, a break in market structure. We're back below the weekly opening gap here. We are currently in this range here, which is below the 50% of this range. It is in the premium of this range though. Let's just do this. So this is how you see it is at a premium, is above the 50% here. However, this range, it is in a discount. And we are at an inverted fair value gap here. We want to see what price does. Ideally, we want price to trade back into these fair value gaps and kind of go short. But anyway, as usual, this is post-mortem or a playbook trade, identifying what trades we could identify that already took place today. Here's today. Price trading into the previous week's opening range or opening. So you got a higher high. You got a break in market structure. You got to pull back into this inverted fair value gap here. Bottom, and then still inside of it. All right, so dollar was long until 10 o'clock and then pull back from 10 to pretty much closing. So let's see what that looks like on the NQ. Allen. Start off with the weekly. And you can look at it in relationship to the previous week's high, previous week's low, open, high, low, close. Pretty much ate the whole wick. He traded into 25. Okay, 177.21.25. So definitely closed below that range. Definitely stabbed through it. All right. So really besides that, you have a fair value gap that price can trade back down into. You can see price traded down into this fair value gap a couple of weeks ago. Then it took off, took out this swing high, dropped down. Anyway, this is an inverted fair value gap now since price traded through it. So something to look out for when price pulls back. If price pulls back, when price pulls back. Obviously we got some here that price never revisited. So all right, this is Friday's high. We ran Friday's low and Friday's high, which to me spells, I wouldn't say it spells danger, but it's something's gonna happen soon. Obviously, something's always about to happen, right? Like, what does that mean? So anyway, take out the low and the high, and it's working. It already took out the previous day's high already here. So yeah, maybe you can see a pullback. Maybe. All right, so this time frame we can see, and bullish fair value gap. All right, traded through it. The bodies of the candle stayed inside of it, and it traded down into the previous week's opening range. Previous week's opening here into a volume imbalance, or all right. What else we got here? We got a small inverted fair value gap on top of that. It's like choose what you want. With this, right? So traded up, back down, traded back up, found support here, take off. It's the previous day's high. Technically, this is Friday's high. So, and Sunday, yesterday, ran Friday's low, pull back inside of this bullish fair value gap, traded back above this bearish fair value gap, made it an inverted fair value gap, price found support, then targeted Friday's high, and then targeted this wick here, and definitely traded through 75% of it. So let's see, 1 hour. So we can see it here. Same thing, Sunday. You have a break in market structure here, or market structure shift. You have a pullback into the fair value gap that's created. Here's your entry, 11 o'clock today. This is what I'm referring to. So, there's your entry, target in here, then here, then technically this wick here. And we have an inverted, we have a bearish fair value gap here. And you can see what price does with that. And that's a 1 hour chart. All right. I'm gonna erase this and erase. No, we can leave that there and just say right, so sell side is rated here. Then what's the next target? Target 1, which indicates, which indicates a break in market structure, especially since it traded into this bearish fair value gap. Right, so that would be, you can use this as your market structure shift, this candle here, or ideally this candle, and we have a retracement. Let's see if we can have my favorite type of trade, which is the optimal trade entry long. Oh, diss me. No, let's use this one. Still a different. Use this one and this change. All right, so we have a little shy of the target, but it did trade below the 50% mark into the fair value gap. And we can drop down to a 15-minute. All right, still, you'd have to just get in at the end, at the fair value gap. Unless you drop down again. And we're using this bodies of this candle. So now this can stay the same as we outlined before. This is where the most, it's anchored here because this is the most dynamic price action, right? In terms of price going long. All right, so in this case, 5-minute chart, you have an optimal trade entry long or at 11 o'clock. Here's your entry. And we have one standard deviation into the 1 hour bearish fair value gap. Anyway, let's note that price ran sell side here on the ES, on the NQ. And that price was, what we say? Price was bullish on the dollar until about 10 o'clock. And it was bearish afterwards. So there you go. This is the result. Now, take note of the ES. No, not gonna go too heavy, but this is Sunday. Price did not run buy side liquidity here. This is a weekly fair value gap. This is a 4-hour inverted fair value gap. Obviously, I would normally just take that off, but I'll fine tune it to the 4-hour chart. So, and I think this was a 1 hour. It is a 1 hour. Traded into that around 10 o'clock, 11 o'clock mark. So that was your entry there. So the point is here is that you had a divergence between the NQ and the ES last night. The NQ ran sell side, the dollar refused. Dollar refused. This is one indication that you have that price was going to be potentially bullish today, along with the DXY, along with the NQ running stops, ES refusing. Let's see what the YM did. This one was even more like ran stops here, but it wasn't a significant low like ES and like the NQ or the ES was, because it was further down here. another indication that price didn't want to go lower at the moment. So where are we? So again, around 10 o'clock is when the dollar was pretty much reached its zenith, its climax, and started to pull down. So there's your indication of potential bullishness. And there's your no man's land, but the NQ kind of helps keep you centered, so to speak, meaning that, there's some degree of gravity there. Here, you're probably like, I don't know where it's going, but the NQ has some type of reference for now that we can use to gauge, what's going on. 5 minutes, and we can go back to the ES and see. Anyway, I'm pretty much done. It's late for me. It's 10 o'clock. Yeah, didn't want to discuss breakers, so let's take that off. That was supposed to be in a 15-minute chart as well. And I was looking, I was doing something around this time here. All right, so in any case, you can still see this is the Asia session. See price traded back down. So the London session, here's the Asia session low to, what am I doing here? All right. We have the Asia session to the London session. So there's a new day, midnight open. Price refused to take out the Asia session lows, rallied higher. There's a swing low. Yeah, that type of setup is kind of annoying to me. Hopefully, all right, here we go. So we have this swing low, swing high in the London session for a optional trade entry long just before the session ends. Taking out the London session high. Have a pullback again prior to the market opening. This is in the 8:30. This is official. And keep that same level. So we have, again, this is a 1 hour bullish fair value gap. And here we have the bullish fair value gap. Price trading into it, refusing to break below it. This, I believe, is a 15-minute inverted fair value gap. It is. And I was just kind of testing to see. I think I was looking for a trade around this time period here on the 15-minute. Only went 15, 5, and 1. I was kind of anticipating this long to happen, but this one happened. It's targeted this high. Then I saw the 1, 2, 3 pattern pull back, run the sell side here into the 1 hour fair value gap, and then traded into here, consequent encroachment, pull back into this fair value gap, and then the one that's not highlighted, obviously. Miss this one here, and then push higher. So that's one entry, two entries. Had a couple of good entries today. Same price range. So another entry here, and look like 3 standard deviations. What is this? Let's throw the third one up there. Almost 3. But you have fair value gaps. This one here, support and price higher. That's at 345. And that concludes tonight's review because I'm sleepy. Time to go. Thanks for listening.